That's right, guys. It's me, James Sweeney, coming at you this time from the floor of the New York Stock Exchange. And it's another cold day here in New York City, but hey, what do you expect? It is the winter, right? We're post-blizzard. And it's also about that time. That's why I'm a little bit happy right now. Not because of how the stock market is performing, but because it's almost 4 o'clock. The markets, they're almost closed. It's time to grab yourself a drink. You know why? Because it's happy hour in New York City. Now, U.S. stocks this Thursday afternoon right here on the floor of the New York Stock Exchange continue to see a mostly seesawed trading session with stocks pointing higher. This due mostly in part to investors taking in a mixed bag of corporate earnings as well as a drop in jobless claims figures. Now, first we have to talk about that data. Stock futures seeing some serious gains after the Labor Department reported that jobless claims figures, they dropped by 43,000 to come in at 265,000 last week. Take note, that was fewer than forecast, and it was also the lowest number in nearly 15 years. At the same time, U.S. stocks offered very little, almost no reaction to pending home sales figures dropping 3.7% in December. At the same time, we got to take a look at how the markets are performing elsewhere. We do have the U.S. dollar at this time on the upside against its counterparts. Crude oil futures declining more than expected, and then we also have gold futures on the downside. Also keep in mind, crude futures yesterday continuing to slide after hitting an inventory level that has not been seen since 1982. Now you combine all of that with, once again, a series of corporate news reports, and you have yourself a session where for every 3 shares rising, 4 have fallen at the New York Stock Exchange where I stand right now. Let's take a look to see how the markets are shaping up to close out this session today. And lastly, on the corporate front, Alibaba Group Holding falling after the Chinese e-commerce company reported that quarterly revenue fell short of expectations, and at the same time, McDonald's gaining after the fast food chain said that its chief executive officer will be replaced by its chief brand officer beginning March 1st. I guess a lot of people still are not loving McDonald's. So there you have it. Kick back, relax, grab yourself a drink. One more day left until the weekend, and I'm glad because I really need it. I'm sure you guys do. You guys do too. See, I really need it. And until tomorrow, for ModernWallStreet.com, I'm James Sweeney.